All right, everybody. So the housing market might not even rebound for the whole entire year. So I will play a small clip from the Financial Post right here in Toronto, and then we can get into it and we can talk about it.
Yeah, because it's interesting. I mean, we do quite a bit of public polling, and certainly the last round that we did with Ipsos, one of the things we were asking is, if you're going to be a first-time buyer in the GTA housing market over the next year, how much would you need to see in terms of interest rate relief, interest rate cuts, that you'd be comfortable moving into the market from an affordability perspective? And people are talking about 200, even 300 basis points to see them moving off the sidelines and into the housing market for the first time, or even looking at people that own an existing home and might be looking to say upgrade. The same sort of calculus applies.
So as you saw, even they are claiming that the market is falling at this point. It might need that rebound for another full year. Also, they have mentioned that a 200 to 300 basis points in order for some, hear me out, new buyers and also a step-up buyer, which means the entire market needs that push from the financial sector, from the banks, in order to ignite that particular market. But hold on a second, not so fast. We have to worry about the inventory, we have to worry about immigration, and we have to worry about so many other things. US election, US, Canada, all these things matter when it comes to real estate. I will share my computer screen, I'll show you some graphs, and let's talk about it together. So here we go. As I have mentioned, sharing my screen here. So we see a 10-year monthly moving average, and only thing that we remember in the whole real estate cycle, it was the winning cycle right here. 2020, we see this graph actually shooting up to the skies. Like that was not controlled. It was just like going bananas. So that's the only thing we remember. Okay, so we have a short-term memory here because real estate market has up and downs. So does this cycle. It has also downs. So what I'm trying to say here is that this particular correction, as you can see on the monitor right here, this is a correction. So now we see that in 2024 right here, we see that is actually starting to feather down. And yes, we're gonna see up and downs depending of what the Bank of Canada does. But they're promising that they will continue to cut rates as we're moving forward. Having said that, it's all on anticipation. And here's why. We're going to get to the immigration statistics. We can go back, 3, 4, 5 years ago when they were claiming like there's no need for us to increase the interest rates. And yes, at that time, maybe they did not see a particular need, but very important in this graph, as you see, like this is the median. And then from 2020 here, like it shot up and it went up. All of this iceberg upside down is a correction. All of this is a correction. So in order for us to have a normal equilibrium or affordability, or you can call it whatever you want to call it, all of this has to be fixed in order for us to get back to the affordability level. Because whoever you talk to, your neighbors or your friends, acquaintances, you name it, they're all saying the same thing. But I would also like to add on something else. And like a lot of people don't talk about that. Like in this graph here, in this iceberg upside down, okay, one thing that people are missing, okay, I'm not saying this happened to everybody, but for most it did happen. So this is the medium, this is the 2020, this is the iceberg, remember? Okay, so in order, at that time, Okay, so we're talking about government stimulants. So that was one check. Then we're also talking about people acquiring more debt. Like they were just running into the banks and they were gaining more volume in terms of mortgages, line of credits, adding more burden, new cars, new of everything, right? So all of this iceberg was pushed by death. Like that's one word. Like that's what's happening, right? So whoever you know that kind of changed their real estate portfolio went to bigger, to better, with a bigger mortgage size. That's all it happened. So all of this iceberg upside down is an iceberg that has to melt. And until this melts, and going back to the screen, you can see that it already melted. But now the people are obviously, I'm not gonna use the word angry, but they're just confused because they're like, look, I invested, I need to see a return. It's very simple. And yes, I agree with you. You should see a return, but unfortunately, you were gambling. Like these were the times where people were gambling, right? Because everybody thinks that this is never gonna stop. And no matter what kind of graph you show them, no matter what you did, there's an amazing sentence that they use, all of them. And they say this time it will be different. Why is it gonna be different? What you tell me, one thing why why the bubble this time is going to be different than any other time. And we have seen it through history, right? Great Depression, this, that, financial crisis, dot-com bubbles, and all of that stuff, right? We know about that, but this time it is different. No, the iceberg upside down will melt, it will be flat, and here we go again. So unfortunately, if you're here, you either will lose some money or your carrying costs are going to be extremely high. And that's why some people are struggling, because nobody likes to lose. I get it, people. You don't want to lose. I get it. But moving forward, let's go back to the monitor. So interest rates, as I have mentioned, obviously, we saw it. We saw the spike in 2022. It started going up. To be specific, March, it started going up. But we went all the way to, 5%, 6%, 7%, depending on your qualifications. But it was ludicrous, right? Nobody, I'm not going to say nobody could afford the money to borrow money, but it just didn't make any sense, right? Like you're not going to have any profits if you borrow money, like even if you're in business, even if you're flipping, whatever you were doing. So it didn't make sense. So everything kind of stopped and everybody kind of started to see what's coming, but they were hoping for the best. Now, the best is coming. Check this out. The rates are feathering down, and great. Everybody loves it. Quarter point, up on quarter points, and then big one, half a point. Here we go. That's what we were waiting for. But nothing happened. Some, I would say, sellers or speculators in the market were hoping, look, as soon as that happens, people are going to start lining up. My friends, this iceberg going up is not going to happen for a long time, where we see lineups. Not going to happen for a long time. I don't know how long. Might be a year, might be 3, might be 5, but it's not going to happen within recent dates. Now we see this feather in the right direction. And now we get into, back to the monitor, now we get into the actual data. So if you see the data, right, like, and some changes, like they're very small, right? Between 2023 and 2024, it's a year apart. There's only 8.5% in sales. So you would say, well, it's not much. It's nearly 10%. but not a big deal. But hold on a second. Now, when you're adding, the change of new listings, which is above 10%, and then you're adding active listings that are over 35.5% from last year to this year, now this becomes a big deal, right? Because everybody is trading with the handbrake on. That's the problem. People don't understand that, right? Because the next listing that comes out is going to be cheaper than yours today. So many reasons. One, because you're probably stale on the market. Second, everybody's trying to evaluate. So now, depending on you and on your budget and on your gut feeling, or whoever and however you're managing your portfolio, but most of the time somebody's got to give in. Like, remember the iceberg going up, right? Like, people, like, you list this for $1 million, I'm going to list for $1.1 million, and then I list for $1.1 million, you list for $1.2 million, and then it kept going. The ludicrous situation here, and then we stopped that. We said, you know what? Who cares? We're not going to do that anymore. What are we going to do? We're going to pull the handbrake. We're going to list the property extremely low and hold offers. That's what we're going to do. And then let 20, 30, 40, 50 buyers decide what they want to pay for the home. And obviously the banks were encouraging. They're going, yeah, go, bid, right? Like a casino. And that's what happened. So now it is what it is. So this is why that, month over month in 2024, there's 25% of inventory coming back to MLS, whether it's price change, termination, like whatever it is. That's a quarter. That's a lot. So every 100 homes, 25 come back. I don't even want to get into pre-construction. I don't even want to get into assignment sales. Like that already failed. Like, everybody is biting their nails already, right? Within the next year, 2-3 years, there's over 40,000 units to be completed in GTA, Toronto GTA. Imagine that for a second. We already have a problem unloading this, but it doesn't stop there. So let's move to another graph. And this graph is from the Government of Canada about the statistics of immigration. Yes, they open up the gates, thinking the best possible outcome. And we had, over 500,000 immigrants, visas, PR cards, whatever. Like, they were coming in to our country, to Canada, trying to find shelter, trying to find a life. Fine, no problem. Do we have the infrastructure for that? No. Do we have XYZ for it? No. But fine, it is what it is. Now we're stuck with that situation. And they kind of were anticipating that this cycle will continue for the few years to come, right? And then the investors, check this out for a second. An investor sits down, or a speculator, right, takes a calculator and says, hold on a second. If we did 500,000 this year, and then last year we did 500,000, that's $1 million, and then in the next 3-4 years we did another half of a, there's a couple of million people come. They gotta live somewhere. Somebody's gotta buy this real estate and all of that stuff. This is how speculators, investors, and everybody else thinks about, right? But then they pull a handbrake. Check this out. So reducing from 500,000 permanent residences to 395,000 in 2025, reducing from 500 permanent residences to 380,000 in 2026, setting a target for 365,000 in 2027. Is it a big deal or no? I don't know. But this, within the next few years, is 500,000 people, right? Less. That's a lot. Think about it for a second. Like, that's like 200,000-300,000 units that are lacking now, right? But anyways, so this is something that was very interesting to me that they have changed, obviously, the dynamics when it comes to the immigration, whether for good or for worse, or how they're going to do what, I don't know. But this is just a statistics. So now, let's talk about something else. So now between the US and Canada. Okay, so now we have the US election and all of that stuff. It's across the border. Is it going to impact us or no? We don't know. Usually does. It does all the time, right? Even though people say this time is different, but it does impact us every single time. So a big issue or a big picture here is that, prices in the United States are significantly lower than in Canada. Some of you know, some of you don't know, but we know that for $1 million now, there's not much we can actually purchase. And in the United States, you can buy mansions all across the country. But having said that, right, the impact of the interest rates to the United States and to us, it creates a totally different ball game, right? Like 0.5% to us means a lot because we carry a lot of debt. Like $1 million mortgage in Canada is an average mortgage nowadays, I'm assuming, right? But in the United States, their homes cost, 250,000, right? 230, 300, whatever it is, right? So that calculation it's completely different. And also their fall, it's different than our fall. Well, let's just imagine something here for a second. Imagine we are down by 10%, which we are comfortably down already by 10%. So we feel it. It's at $1 million, it's $100,000. Imagine we go down another 10%. That's another 100,000, right? So we're $200,000 off the table already. In the United States, it's different, right? Because at $200,000, 10% is 10 grand. 20% is $20,000. Yes. Will they feel it? Absolutely. But for us, because the one thing that's shaking Canada right now and always has been, it is simply said in one word, real estate. That's it. Our industry, it's probably not the best. We don't manufacture not a lot. We don't have, I don't know about the IT. Yeah, maybe here and there, but nothing to that significance that can hold the entire country together. So we have real estate. So now having the real estate, we have to be very careful. And all of people are carrying all these burdens now. So we will see what's going to happen. I hope it doesn't come to the worst possible scenarios, which is a crash. And I know a lot of you said it is not possible. It cannot happen because it's different this time. But nevertheless, I do believe that we're facing a recession and we're looking at a recession. It's just maybe not out there yet, but slowly it's coming out. The word is coming out. Now even Financial Post, we need 200 to 300 basis points down in order to see movement. We need this, we need that. The unemployment is okay. But the first people that see it, it's actually the people that are commission-based, that have their own businesses, restaurants. Talk to any restaurant owner today and see what they're going to tell you. Franchises. Talk to anyone that owns a franchise. Let's see what they're going to tell you. They're going to tell you simply, it is very expensive. We cannot afford it. We're barely breathing and I want to sell it. That's it. No more profits. So unless they fix the affordability, I don't know how they're going to do it, but the only way how it can be done, because once you get to the 0% of mortgage, which is not going to happen, banks are not going to make any money. So it doesn't make any sense. So we have to hover at least around the 3%, right? Inflation has to be where it is right now, 0 to 1%. And what's next? The prices have to come down. The affordability has to come back on the table. I hope you enjoyed this video. If you stuck to the end, I thank you so much. I hope you got some value out of it. And if you feel that this content and this video can help someone else, or somebody needs to hear this, please share the video. But in the meantime, you can click on all the other videos that are on the screen, and see you in the next one.